This week's topic came from an actual viewer that left a comment on one of my other videos. And he asked, what is an escrow account? And he asked my opinion about it. And I answered the question, and then I thought this would be a great topic to really get in depth with. So that's what I'm doing today. We're going to talk about all things escrow accounts. So stick around. Hey everyone, this is Danae Hewitt, your go-to DFW Realtor with Brico Realty Services. I help people buy and sell real estate all over the Metroplex. And if you're planning a move here to the area, I can also help you do that as well. I have helped lots of clients from out of state move here to DFW, and I can do that for you too. My contact information is in the description below, so please let me know how I can help you. And let's get into today's topic, escrow. We hear the word escrow all the time, and what does it mean? Well, it can actually mean a couple of things, so let me go through them. A lot of times you hear people say, we're in escrow, which means that they are selling their house and they have a buyer, they've signed a contract with them. So right there, they have started the escrow process. Here in Texas, we don't really say, we're in escrow. You usually hear real estate agents say that we're under contract, which means the same thing. We have a client that is selling their house. We have an executed contract from a buyer. So we are starting the closing or escrow process. Escrow also has to do with money for two different reasons. So the first reason is currently in the middle of a real estate transaction. The seller is selling their house. The buyer has to put forth some money into a neutral third party's escrow account. And that neutral third party is one of our title companies. Those title companies are in charge of all of the funds moving and changing hands, all of the documentation that goes along with buying and selling the house. They are responsible for all of that. And when I say neutral, it means that they have no relationship with either the buyer or the seller. They are a third party that is just handling the transaction on behalf of both people. So those funds sit in an escrow account and they are dispersed to whoever they need to be dispersed to when the home finally sells. So that's one way we can talk about what an escrow account is dealing with money. And the other way is outside of a real estate transaction, and it has to do with your current mortgage on the house. So you've already bought the house. Now you have an escrow account that's associated with your mortgage. And that's really what I'm going to talk about today. Mortgage escrow accounts are special holding accounts for your property tax payments and homeowners insurance premiums. So what does that mean? On a monthly basis, you're going to pay something that's called PITI, and that stands for the principal payment on your mortgage, the interest on the principal payment, the T stands for taxes, and the last I stands for insurance, which is your homeowner's insurance. What's going to happen is on a monthly basis, the taxes on your property and the insurance on your property are all due on an annual basis. But what your lender does is you are billed for it up front, and that is held in a separate escrow account. And over the course of 12 months, that account will build up, and then the mortgage lender is going to make one payment on your property taxes and on your homeowner's insurance for you. So really, you don't have to think about it. It just comes out of your checking account every month. I know you're thinking, well, how do they know how much money to set aside on a monthly basis? And that really is a guesstimate. Your homeowner's insurance and your property taxes are based on the previous year's taxes and insurance. So what they're going to do is they're going to guess that that's what you're going to have to pay this year. But then they're also going to make sure that they have an extra 2 months of money from you in that account just to cover it if for some reason either one of those does go up. If for some reason those rates do go up and it's more money than what you have in your escrow account, then your mortgage lender is going to pay that difference. but they're going to send you a bill for that. So be prepared for that. But also on the other end, if you have more money in your escrow account than what is actually needed that year, then you're going to be sent an escrow refund, which is always really nice. And if you're like me, you're thinking, I wonder if this escrow account grows interest. And the answer is no. I'm sorry, that's it. The answer is just no. It doesn't. Is it possible to pay your taxes and insurance in one lump sum at the end of the year? And that answer is maybe, and I'll get to those reasons why here in just a minute, but let's think about the pros and cons of that. If you're one of those people where you don't have to have your lender set aside the taxes and insurance on a monthly basis, then you have to do that on your own. Every paycheck you get, you need to figure out how much your taxes were last year. You need to figure out how much your homeowner's insurance was last year. And you need to divide that by 12 and set that money aside and take care of that. Me personally, that's a lot of work. That's too much work for me. I have other things to think about in my life. So I am very happy to pay my PITI on a monthly basis and have somebody else worry about that for me. And here's another pro. Your mortgage lender is going to be making this payment on time for you. And if they, for some reason, pay it late, well, guess who pays the late fee? They do, not you. If you are the one making your taxes and insurance payment and it's late, then you are the one that's responsible for making sure it's on time and for paying the late fee if you don't pay it on time. So whether you can opt in or out of this escrow account has to do with the type of mortgage financing that you received for the house. So let's talk about a VA loan. If you used a VA loan to purchase the house, technically you don't have to put any money down. But if you want to opt out of your escrow account, then on a VA loan, you would have to put at least 10% down on the home in order to opt out. And they also want you to have a good credit profile. Now, what that means, good, bad, of course, I don't have the answers for that, like exactly what your score would need to be, but just know you would have to have good credit and 10% down if you used a VA loan. If you used a conventional loan in order to purchase the house, in order to opt out of an escrow account, you would have to put at least 20% as a down payment on your house. And for both of these cases, when I'm talking about a down payment, I don't mean the total of your closing cost. I mean the down payment that goes towards the mortgage, the price of the house, which is outside of what your closing costs can be. And if you've got any questions about what a buyer can potentially pay for closing cost, check out that video right there. If you received an FHA loan in order to purchase the house, then you are not eligible to opt out of this escrow account. You have to have those funds debited on a monthly basis. Well, let's say that you have sold your house somewhere in that year, in that 12 months, but you've got some extra escrow funds in that account. Well, then guess what? Those extra funds are going to be sent to you at a separate time, a couple of weeks after your home has actually been sold. And you'll get a nice little check that you may or may not have been expecting. So again, any extra money that you have set aside in this account, it's yours. It's going to be sent back to you if there are any extra funds in there. So speaking of selling a house and getting escrow funds sent back to you, that actually happened recently to some clients of mine. And they called me up and they said, oh my gosh, is this for real? It was something that the title company didn't know about. None of us had known about it. And I said, well, just double check, call your mortgage servicer and make sure that you can cash that check. They made the call and guess what? They were able to cash that check. What a surprise that was for them. Like I said in the beginning of this video, this one was inspired by an actual comment from a viewer. If you've got any questions about escrow or anything real estate that you'd like me to cover on this channel, leave me a comment in the description below and I'd be happy to help you out. And also give this video a like or share it with somebody. It helps the YouTube algorithm to push my content out there to other people like you that have questions about real estate. Thank you so much for tuning in this week, guys. I'll see you next week.